In the markets, we've seen the Dow push deeper and deeper into record territory after the Senate approved its version of a tax reform bill over the weekend. However, the Nasdaq continues to fall as investors take their money out of technology stocks and put it into financials as well as industrials. Joining us now, Anthony Chan, chief economist at Chase. Good morning, Anthony. Is this a natural rotation away from technology, or is it something else?
Yes, Lauren, that's exactly what's happening here. The tax rates are also a little bit different. When you look at the S&P 500 technology sector, has an average tax rate of about 24%. You look at something like retail, well in excess of 30%. So you're seeing a rotation from those sectors that have low tax rates and therefore would not benefit as much from tax reform, and moving more in the direction of those sectors that have a higher effective tax rate. And by the way, let's not forget that the technology sector has done very well. If you look at the NASDAQ 100 on a year-to-date basis, is up almost 20%, 19%. And of course, it's given back about 3% over the last 5 days.
And we're looking at Facebook shares now. They're up 55% this year, to your point, but they were down 2% yesterday and down for a few days in a row now. By the way, Anthony, you have new digs today. I like the backdrop. I just noticed that.
Okay.
I also wanted to ask you this as we talk about the tax reform plan. In the Senate version, they keep the corporate AMT. And now you have lobbyists, yes, from the technology sector, but also from the banking sector saying, look, this defeats the purpose of cutting corporate tax rates if you don't let us claim certain credits, for instance, for research and development. And as far as the tech companies are concerned, this is hundreds and hundreds of millions of dollars a year. What do you make of the Senate version to keep the corporate AMT?
Well, obviously, everybody wants to get a bigger break. It's worth about $40 billion over a 10-year period, so that if you sort of take it out and get rid of the alternative minimum corporate tax, then you have to find other revenue sources. Perhaps that's one of the reasons why the president sort of has hedged a little bit and said that he's willing to take maybe a corporate tax rate of 21 or 22%. Remember that every 1% increase in the corporate tax rate over a 10-year period is worth about $100 billion. So to get the job done, you may have to give some things up, but tax reform is certainly going to make the economy grow a little faster. Certainly next year we're looking for corporate tax reform to boost S&P 500 corporate profits. So whatever it takes to get the deal done, I think, is what the president is saying. And I think that companies would benefit from tax reform, even if you have to give up a little bit.
Yeah. And the jobs report for November comes out Friday. What are you looking at?
I'm looking for numbers to improve. I'm looking for maybe 170, 175,000.
That's it?
I've done some. That's it for now. I mean, we're moving sort of advanced. I look for average hourly earnings to bump up. They were kind of flattish last month, maybe up 0.3%. I've done some research looking at the Federal Reserve Bank of New York's underlying inflation gauge, and that one has turned up, but it takes a long time to show up in average hourly earnings.
All right, Anthony, thanks for helping us this morning. Appreciate you, as always.